Hello, everybody, and welcome to Fundingportal's webinar on COVID-19 stimulus programs and how to get funding, hosted in partnership with KPMG Canada. Thank you for joining us. My name is Karen Fournier, and I'm the CEO of Fundingportal. I'm going to be your technical moderator today. Please note that your lines will be muted during the call. However, you can type in questions at any time using the Q&A tool. We'll answer questions in the last 20 minutes of the webinar, and we do encourage you to upvote any questions that you find interesting, and we'll answer the most popular questions first. We're also going to reach out via email with a copy of the slides after the presentation later this afternoon. So before we get started with the content, we're going to do a quick poll. We're interested in knowing what's your current level of understanding of the federal and provincial funding programs right now. And we're going to use this information to inform our content. So I'm just going to give you 30 seconds or so to provide your answer. All right, so we're going to close the poll. Thank you for voting. So the results are, I'm going to share them in a second. So 52% of you have a good understanding, that's great. And then 40% of you have an average understanding. So hopefully you'll find this session interesting and we'll be able to further your understanding. So let's move on to the main content. Joining me today is Fundingportal President and CEO, Terry Kirk. Terry, you can go ahead.
Well, thank you so much, Karen, and it was great to see so many with good confidence, and we're going to get you all up to excellent by the end of the session. That's a great objective. We're specifically going to cover off 4 things on the agenda to highlight the top new measures. I'm sure all of you are busy paying attention to these programs, so we'll highlight them for you. We're going to look at how to create a funding strategy to take advantage of the right programs for your organization, and most importantly, how to apply and actually get this money. My background quickly is I'm a Juris Doctor in law, and I have a master's degree in digital transformation, and am founder of Fundingportal, which has worked hard to work with partners like KPMG and other valued service providers in the community to make sure that companies can navigate around grants and incentives. We're very thrilled today to be presenting with our partner KPMG, and in particular Jean-Philippe and Anouk. Let me tell you briefly about Jean-Philippe, who has 15 years experience in deal advisory services and enterprise audit, and he's leading the Quebec Provincial Corporate Finance team. So he's just a great wealth of knowledge in this area and so many others. And Anouk, like me, is a lawyer and supports the national tax team at KPMG as a tax professional. Wonderful to see us lawyers out in the community helping you through these complex issues. We are also pleased to be joined on the line by 3 KPMG experts. There's Andrew McDowell, I've known for years, wonderful advisor on tax matters, and Eric Thibault, wonderful Eric, who's running the advisory and the senior advisor in the Quebec City office, and Carol Tong in British Columbia. Welcome aboard to the digital KPMG team. Let's get going then with our top new measures. And we're going to highlight 3 of them today. You'll see them listed there. The BDC Mid-Market Financing Program. Most of you will feel that you know the BDC programs by now, but a new one was announced yesterday, so we'll highlight that. What everybody is affectionately calling CEWS, the Canada Emergency Wage Subsidy, and the Rental Assistance Program. Let me go into some of the fine print on each of these. So on the BDC program, as I say, this new extension was really announced yesterday. It's not for everyone, it's for larger companies with revenues of 100 million plus, and the debt financing levels are $12.5 to $60 million. So these would be for larger companies who have capacity to take on more debt to get through the COVID period. So thank you to BDC for helping companies out at this this time. CEWS, you will know well, as a 75% wage subsidy. Some important fine print there. Your revenues have to have decreased by 15% in the month for which you're applying. So 15% in the month of March alone, or 30% in March and April together. The comparator is either over the January-February timeframe of this year, so kind of a month-over-month decline, or the same month last year, so a year-over-year comparator. The maximum you can get is $847 per week per employee, and that translates to $11,000 per employee for a 3-month period. So that's definitely a helpful contribution by the government, and there are no cap on the number of employees. So you know, across several hundred employees, obviously it's a very significant amount of funding. The applications are really quite straightforward. They're filed through the CRA, so it's not an extensive grant application. It's filed with the Canada Revenue Agency. The program opened on April 27th, and the money did begin flowing on May 5th. So we're, you know, CEWS, I think, is really an important foundational program that everybody should be looking at. Then there's what we're affectionately calling CCRA, the Emergency Commercial Rental Assistance Program. This is paid to landlords. There is quite a bit of fine print, shall we say, around this program. It's not officially open, but expected to open this week or next, so stay tuned. There'll be a limited time to apply up till August 21. It's being administered by CMHC, that's Canada Mortgage and Housing Corporation. They're providing forgivable loans to the commercial property owner. You have to have a mortgage as a property owner to qualify, and you have to have eligible tenants, which are small businesses and charities and nonprofits. These companies, these tenants have to have basically be CEWS eligible. Well, even have suffered a greater decrease in their revenues, so a 70% decline. So really companies that are very, very hard hit by COVID. For owners who have no mortgages, there is expected to be a new program, but it's not yet out. The loans, forgivable loans, will cover 50% of the rent for the affected months, April, May, and June at this point. And then the other half of rent is shared equally by the landlord and tenant. Okay, so that's some of the fine print on each of those 3 programs. I'm going to turn to KPMG and just ask them for their views on these top 3 programs and whether I've missed anything. Anouk.
I would say that you did not miss much, except I'm the wage subsidy, so the 75% expert amongst all of these measures. Although the application for it seems to be fairly bluntly simple, a lot of work has to be done beforehand to ensure that you maximize and that you're eligible to it. So for all of these measures, the eligibility criteria varies, the dates vary, so you just have to pay attention to details. That's where the devil is. You have also to check the deadlines per se for the 75% subsidy. We can claim it, and we can claim it until end of September. And in some cases, if the cash flow permits, it's advisable to take the time that it takes to ensure you maximize the subsidy that you're claiming. So in some cases, we see that the various options that one employer has with regards to the calculation of the subsidy can make huge differences in the subsidy obtained. And to present your application adequately, it's important to keep in mind that you have to document properly, because CRA seems to be very generous at this time, but as also pointed out that they will audit the applications once made, and you want to make sure that you keep what you earned or what you got as a subsidy, and documenting it properly is the way to prevent future damages and to permit you to keep whatever you claimed.
Well, thank you, Anouk. I think those are excellent points and very much correspond with our view. The devil is in the detail, and you certainly don't want to get amounts clawed back. So thank you. Let me raise a second question then with you or Jean-Philippe. Just on the CEWS program then, what wages are actually eligible for CEWS?
I'll pick up this one too, if you permit me, Jean-Philippe. One thing that I've noticed is that you have to split your mind in two. So you're looking at the eligible revenue of an employer, and then you're also, once that has been settled, have to look at the qualifying income, so the remuneration of the employee. So all these black highlighted words have a specific meaning. So when you look at it, you have to ensure that as an eligible employer, you do have eligibility. So basically, you're one of the persons named in the Act. So a corporation that's not a public institution or an individual that has a RP number with CRA. You can be a registered charity, a nonprofit, a partnership, and you have to fit in all these criteria. Then you have to ensure which period you're claiming the subsidy for, and these periods have nothing to do with your wage payment periods, which has caused a lot of confusion. And pragmatically talking, sometimes it can present itself as being a little complicated because you don't just match the paychecks with whatever day you want. You have to fit within these qualifying periods that you see at the screen. So March 15th to April 11th is stoned, it's fixed, you can't play around it. And then when you look at comparing the revenues from this year to last year, or from this March to an average of January and February 2020, to ensure that you get the reduction threshold that you need to get the subsidy, you also have to take into consideration that the revenue you look at are not calculated the same way. Per se, if you're looking at March 2020 compared with March 2019, sometimes you may have had a reorg. So if you compare the revenues and you have one more entity in your group or one less entity in your group, it creates a little bump in the road that you have to live with. So there's a lot of specific rules that you have to take into consideration. Generally speaking, those specific rules may have to do with nonprofit organization, with people who derived all or substantially all of their revenues from non-arm's length person or partnership. If you're a group of affiliated members, there's specific rules. If you're an employer and you're owned by participant in a joint venture, there's another set of rules. Plus some specific rules permit you to calculate your qualifying revenue using the cash method of accounting. And if you do so, for all of these different ways of calculating, you have to elect. And some of these elections will bound you for all the qualifying periods. So to put a short answer, qualifying revenue is well, not necessarily complicated, but fairly detailed. Once you ensure you have the drop of revenue that you wanted to have or needed to have, then you look at your employees one by one, figuring out what's their eligible remuneration on which you can have the subsidy. So an eligible employee has to work in Canada, is not necessarily required to be Canadian. And if he was not paid for a period of 14 or more consecutive days in a claim period, then he disqualifies. In some cases, you have employees that were hired after March 15, so you have another set of rules for that. And sometimes you want to rehire them retroactively, and then you have to ensure that if they claim the CERB, which is another subsidy, the CERB being the 500 per week for 16 weeks that someone laid off for COVID reasons had the opportunity to get. So basically all these come before you apply the calculating formula for the subsidy. And if we go to the next slide, I'll use an example in the interest of time to explain in a faster way how this subsidy is calculated. So basically, you have to compare the baseline remuneration of an employee, meaning an average of whatever the employee was paid between January 1st and March 15, to the paid remuneration, meaning whatever he was paid in respect of a period that corresponds to one of those 4 periods that were on the 2 previous slides. And then you calculate whether a greater of 2 amounts. So you take 75% of the paid remuneration, and this is all chopped to $847 a week, or the lesser of whatever this employee is being paid, or 75% of the baseline remuneration. Going back above, it means whatever he was really paid between January 1st and March 15. So to sum it up, basically, if you pay below 1,100 a week, you get either the full 847 as a subsidy, or if you pay less than that, or if the employee was paid less than that between January 1st and March 15, then the employee will be subsidized, or the remuneration of the employee would be subsidized up to whatever you pay them. So this slide could be shared afterwards, and you guys can look it around and see the numbers, but basically it gives an idea of the end result, taking for granted you considered all what I named before, and that was just high level. So the devil being in the details, there's a lot of details here.
Well, that was a really thorough answer, and I really appreciate it. I hope others did as well. And your experience as a tax litigator shows that you're really able to dig down, and be happy to have you in my court. Thanks so much for that. Let's turn to the rental program that I touched base on, and just again see if there's a little bit more fine print that would be of value to people on the line.
For this seeker program, what's sad as of today, and I went just before this call, there's not much announced, and a lot of it is still pending. So basically, the deadline to apply is August 31st, 2020. And what we still don't know, and what bugs us, is that impacted small business tenants who generate 20 million or more are not covered yet. So landlords with no mortgages are not covered yet either, which in a way does not make much business sense. And for all of those people that wish they could benefit from CECRA, well, we're still waiting and checking on the Canadian Mortgage and Housing Corporation website on a daily basis, or bi-daily basis, to figure out how it will really be executed. So for now, it's like a candy you're looking at and can't have access to.
Yeah, we share your frustration, I think, with this program. I think we were all excited about the prospect of getting some support for rent while our offices are sitting empty, and the restriction that we understand that CMHC, the program is applying, that you need to have suffered a 70% loss in revenues, which is, you know, more than most, will really limit the value of this program. Many of the programs have, in response to kind of public complaints, become a bit more generous in second rounds, and we hope that will apply to this one as well. I'm going to then turn to my fourth question, and so really reiterating and getting into a bit more detail on each of the three top programs we highlighted. You know, which one are you finding most popular? We're finding CEWS obviously to be the most popular. We know that CECRA isn't out yet. What are your views around just the relative merits of these programs for companies?
Yeah, so hi everyone, this is JP. Maybe a few things. So the CEWS is obviously the largest economical program that the federal government has ever announced. So it's lots of companies are looking for grants, and this is the program where you can get a real cash flow relief. It's really important. It's really important to look at it properly. If I can add a bit of color on this one, because it's so important. Keep in mind, you don't need to pay the 25%, the part that of the employers, if you go all the way up to $58,000, the maximum earning that it's covered by this program. And keep also in mind, and to reiterate it, if you don't have short-term cash flow problem, you don't need to apply right now. You can take a look throughout the next few months to see what method of calculation you would use in order to be able to assess what would be of greater impact for your company. In terms of the other financial type programs that were announced originally by BDC, EDC, and in some provinces, for instances in Quebec by Investissement Québec, keep in mind that it's not too late. It's we're almost 2 months into the sanitary crisis, but the finer prints of all of the BCAP by EDC and EDC, the working capital loan with BDC, the Canada Emergency Account loan, the $40,000 loan. It's still time to apply for these programs. One of the most popular programs that we saw for smaller businesses, obviously, is still the emergency account. So it's for up to $40,000. For every programs, you need to go through your financial institution. EDC, BDC, the likes are going to take advantage of the actual banking relationship and all the documentation and the liens that already exist with the banks. So you need to go through your banks. It's fairly straightforward for the emergency account, the $40,000 amount account. The working cap loan, this one also has been really popular. You need to be able to show the need for short-term cash flows and liquidity. This one, the interest rate changed. Originally, it was the base rate minus 1.75%. Now it went back, BDC's base rate. Now it went back to BDC's base rate only, which is still around 4.5%. And the programs now that we see, and we have discussion more and more with our larger clients, has to do with the BCAP program. So this one, in the case of EDC, we expect it to be more for a short-term cash need. It's really the banks that are holding the pens and that are making the assessment of the risk of the actual demand. EDC are going to be securing 80% of the loan, up to $6.2 million under the current program. There was a larger program that was announced yesterday, for which we're still waiting for more information. But it's a loan guarantee program by EDC and by BDC, on which we see more and more of our clients having discussions with their bank in order to reduce risk, to ask for more availability on their line of credits or on their revolver loan or some other financing instruments that we might see. So not too late. Speak with your bank. Make sure to have proper visibility over your future cash flow. There's an exercise that needs to be done by the company in order to assess what would be the worst case, the normal case, and the best case scenario. You need to be able to assess that. If you don't see needs for particular help right now, keep in mind that it might take some time before your demand gets treated. You might want to still entertain a discussion with your bank in order to assess whether or not you want to go in the queue and make sure to take advantage of these programs. We don't know if we're going to have a second wave. We don't know if we're going to have to go back, and even though we are reopening the economy in some of the parts in Canada, here in Quebec, that's the case in some of the regions. So we don't know if we're going to have to go back to isolation and maybe a brief period of closing. So now is still a good time to assess the worst case scenario and make sure to take advantage of these programs with your bank. So that's the overview, really high level.
Well, wonderful. Lots of great detail. Thank you so much, JP. Let's not forget about our provinces too. I think it's time when we can all be proud to be Canadians and seeing our federal and provincial governments really trying to step in here. And So let's look at Alberta. We've chosen these as just to kind of show you the variety of approaches that are out there. Alberta has tended to be more sectorial in its focus. Lots of early measures highlighting oil and gas, of course, and focusing on abandoned wells, and now more support for the agriculture and agri-food sector. So specific sectorial measures in that province. British Columbia has taken a more generic approach, and please see it extending the layoff period that's eligible for subsidies. And in Ontario, a very specific program called the Ontario Together Fund, which supports manufacturers in making adjustments to their product lines to retrofit them really to support the production of COVID-related solutions, such as masks, for example. And we're going to tell you a bit about one of the first awards that's already being made under that program, a significant one. So just to give you a sense that, you know, the provinces are all doing different things to supplement the federal programs, either sectorial, kind of generic, or in Ontario, this program to really incent the production of solutions tied to the pandemic. Some of the future trends that are not yet out there, but we're seeing, infrastructure funding has always been one of the key ways to stimulate the economy, shovels in the ground. So Manitoba and Saskatchewan have announced recently that they are moving forward with new programs for municipal governments to support municipal infrastructure projects. We'll stay tuned, and I'll be telling you about some of the newsletters that KPMG and Fundingportal are both producing, and links that'll be helpful to you to stay on top of these programs, which are changing really every day. IRAP, of course, most of you know, and there was a very successful program, the IAP, which was for pre-revenue companies, certainly in Toronto. The de facto revenue obligations are about $500K in revenue. So this made it non-applicable to a lot of the startup community. So there was a one-week program, the IAP, and it's come and gone already. And again, there's really considerable pressure for IRAP to extend programming for early stage and pre-revenue companies, and we are have our fingers crossed, but nothing certain yet on that. And some of the wage subsidies and hiring programs are also expected to be relaunched, likely focusing on the kind of post-secondary and high-value STEM type jobs. So just stay tuned on that, and as I say, we'll give you some more information on the best ways to do that. Let's turn a bit then, having given you an overview on 3 of the federal programs, a bit of a touch point on some of the provincial programs and what's in the works. The most important thing, of course, is, you know, how to move forward with the strategy and understand what you're going to be applying for. Both at Fundingportal and KPMG, we're working with companies to really triage and identify the best programs. We have 4 tips that we'd like to share with you. One is just the need for a strategy in this area. Canada has about $30 billion that goes out the door most years in the form of grants and incentives, and it's up closer to $40 billion. Right now, during this period, close to 5,000 distinct programs to which you're notionally eligible. So it is a very difficult world to navigate around, and you can write brilliant applications, but if it's in the wrong program, it's not going to get you very far. So we just encourage you to take this time to strategize. It is a very good time to be thinking about access to these programs. It tends to be a little quieter for most organizations right now, and it is an unprecedented area for government subsidies. Remembering that the money goes to those who ask. You must ask in order to get this money. You know, some of the important short-term programs then are the staffing and internship programs, and longer term, we'll turn to a few case studies now. I think it's always helpful to have a case study to really think about what different real companies are doing to move forward. We've chosen 3 case studies representing different parts of the economy. One is a municipality. We've chosen Winnipeg. It's a client of ours that we've worked with closely, had a very important large-scale telecom infrastructure plan that it wanted to move forward outside of its downtown core, which the private sector tends to have a strong incentive in coming in and putting high speed in, but you step, 5 blocks outside the downtown core, and some of the communities have no internet access whatsoever and no high speed. So they've been working as a community across 13 regions to try and make sure that they get high speed, and we've been really pleased to help them apply to the CRTC Broadband Fund. This is an excellent program. It closes June 1st, so we're 2 weeks out. It is a very complex application process. But I do want to remind people that if you feel that you are somebody who's eligible for high-speed access, we're happy to dig down on that with you. The subsidies are ranging from 40 to 90% based on the previous programs. So if you can get 45, 50, 60, 70% of your capital costs of getting high-speed fiber into your community, that's a really exceptional program and very stimulative as well. Another case study at kind of the opposite end of the spectrum is a really exciting startup that we're working with. It's called riskthinking.ai. It's an artificial intelligence solution that's really trying to give companies the capacity to assess the risk of from their carbon related activities and to reduce and manage risk. It's a really exciting Canadian company and very topical at this time. They'd raised just under $1 million in private investment and obviously looking to leverage that into grants and incentives, and programs that are a great fit for them include IRAP's IAP, which had this narrow window, as I mentioned last week, for pre-revenue tech ventures. SDTC, which used to really only be for very large multi-year projects, has really expanded its scope now, and you see small grants, 60, 70,000, and I think their average grant size is about 3.7 million this year, but it's really covering the whole span of economic activities. And for this particular company, the supercluster in Montreal, the AI supercluster, is a great fit as well. These are kind of in addition to short-term COVID type solutions. We do want to emphasize in this webinar today that these short-term emergency programs are excellent. You should be obviously taking advantage while also thinking about the longer term programs that exist to keep our economy on track and companies moving forward. I indicated with our case study 3 that I would highlight some money that's flowing under the new Ontario Together Fund, which helps organizations to revamp their activity set to really focus on providing solutions to the COVID crisis. Virox was the first company out the door with its Ontario Together Fund application, and it obviously was very worthwhile exercise for it. Got $850,000 under that program and turned around the entire application process really in a few weeks. Other ones that are great candidates for this kind of small manufacturing company with under 200 employees are Engine, the supercluster in Ontario focused on advanced manufacturing, SIFT, the Strategic Innovation Fund, and of course FedDev Scale Up and other programs run by FedDev Ontario. So I hope that puts some of our, let's call it, broader program details into the context of real, very fantastic outcomes for 3 great companies and a great regional government. Let's turn then to how to move forward in this world, what we call the grants and incentives financing marketplace. It is, as I say, typically about a $30 billion financing marketplace in Canada. It's a complex, some would say an irrational financing marketplace. It's very different than VCs or banks, where you can pick up the phone and sit down and talk to somebody pretty quickly and sort out whether you're eligible or not. It unfolds on about 4,500 websites in Canada. The websites are not updated very often. The fine print is really not clear. Companies can waste an awful lot of time applying to programs that they seem to be eligible for based on reading some generic information on funders' websites. So we focus on helping companies through 3 really distinct steps. Each one plays a very big role in your financial outcomes. Finding it is really, in many ways, the most complex. Navigating around, thinking that you're eligible, because it's called the Eastern Ontario Development Fund, and you're in Eastern Ontario and it seems that you're eligible, but really through studying the awards that are actually made and understanding the awards history of programs, this can really help refine what you're eligible for. We're really proud of the tool that we built at Fundingportal called Fund Search. It's a bit like hotels.com, but a much more sophisticated version of it. It's a cheap and cheerful tool. It's on our website. It's $50 to do a one-time use. And we don't pretend that it replaces comprehensive consulting advice that you can get through your accounting firm like KPMG or through our services. But it's a cheap and cheerful tool for companies on a budget or to get you started. In addition to that kind of tool, we do workups, as does KPMG, around all the right programs for you, and much more detailed analytics and predictive intelligence around how much your company might get if it were to apply under a particular program, and seeing the flow of companies who've in fact been funded. The application stage is, many of you will have tried on your own. It's not an area where companies have a lot of success. Funders tell us that the success rate is about 20%. In other words, it's about an 80% failure rate for companies trying to write these applications on their own. I often compare it to trying to do a corporate tax return or litigation documents on your own. They're much more complex than one really imagines. So, up to you. It's great to be able to move forward on your own if you have those in-house services. On the other hand, it's great to know that there are qualified professionals out there. Again, we really work at leveraging technology, and we're really proud of our application bot that we have built. That uses artificial intelligence and model clauses and tools to really, including a digital scorecard, to really ensure that your application is going to be a winning application. I'll just touch briefly on our leverage it tools, which are designed to say that this is not something that you do once. Most companies who do well in the incentives financing marketplace are constantly on the lookout for new programs to which they can apply. Governments are very open to that. They like to support winning companies through all their stages of commercialization and growth. And we have an alerts tool that allows us to stay on top and send you alerts when there are new programs that are right for you. That's a very time-consuming, almost a full FTE, to really just be looking across hundreds and hundreds of websites and finding out when they change or when deadlines open up. Let's turn to some specific advice around how to move forward. Just a few kind of top tips. First, it is competitive environment. There are some programs that really have a very hard time attracting applicants because they don't advertise. They're not well understood. On the other end of the spectrum, there's 4 or 5, and you know them, the superclusters, IRAP, SHRED, that people know about and tend to get oversubscribed. So, really looking to some of the off the beaten track programs can be very helpful, and making sure that yours is the best it can be will be mission critical to actually getting this money. Eligibility and compliance are very nitpicky often. I think we got a sense of that from Anouk's comments and Jean-Philippe's as well, around, you know, how the fine print, which often isn't published around grants, is very determinative. It's a real area of frustration for companies that they didn't feel that these facts were necessarily made very clear to them, and they may not have applied. And that's one of the things, as professionals, we all work to make sure these eligibility criteria are met. And I think thirdly, you do need to build a relationship with the funder. It's like a bank manager. They it's more than sticking a form in the mail or pushing the submit button. It's these are stewards of taxpayers' dollars, and they really want to understand the companies that they're funding and feel good about the choices they've made. Let's look at sort of two questions as you're moving forward with your COVID applications that you can expect to be asked, and we'll need some, you know, great answers to. So, how will my business operate in a social distancing context? Governments are stewards of that again, and need to understand that any company they're funding is a strong corporate citizen and complying and has strong emergency measures in place. And how will I be adapting my business plan and my projects for the COVID environment? I think things like, you know, funders will expect you to be adjusting your revenue forecast. Certainly the premise is that revenues are going down by 30 or 70% under the rental subsidy program, and that your business plans and revenue forecast should reflect that there is a crisis on. And certainly for any exporters, which Canada is a country of exporters, are you know, strong regulatory environments popping up in common export markets, and demonstrating an understanding of how foreign jurisdiction regulatory rules will be affecting your growth strategies are just the sort of thing that you'll be expected to be able to address. Here are some tools for staying informed around not only COVID programs, but the grants and incentives environment more broadly. At Fundingportal, we produce 4 tools to help you do that, and I'll highlight some ways that KPMG is doing a great job at that as well. So we produce Fund News. It is a weekly newsletter. We're pleased to say it's going out to almost 400,000 now. We partnered with the Toronto Star, who's pushing it out to their subscribers, their business subscribers, through iPolitics and Queen's Park Briefing and our own network. So it is a free newsletter. It's, I think, you know, it's nothing glamorous. It's just great practical information on new programs that are coming up and who's getting this money and how to apply and so on. So I hope you'll, if you're not already subscribers, plan to do that. I mentioned our fund search tool. It sits on our homepage at fundingportal.com. It's $50 to use it once, or you can subscribe for $250 a month and use the tool on a regular basis to be searching for the funds that are right for your projects. We also do our custom funding reports, which are more comprehensive custom workups for your company on what's out there. And I mentioned our grants alerts under our step 3. It's $250 a month, $3,000 a year, and we monitor all the programs for you. We do that in 3 countries, Canada, the US, and the UK. If you're a multinational and you don't ever have to have a sleepless night, again, worrying that you miss some fabulous program. Other ways to stay informed, I mentioned Fund News. There's, when we send out these slides, you will see these links, and they'll be clickable links. But on Fundingportal, you'll see our Grants 101. That's really our blog and our newsletter, and you'll see a subscribe form there. And there's some great links on the KPMG website as well. I'm going to give you some contacts, and then we're right on time to take your questions. So at Fundingportal, you can reach out to me personally at Terry Kirk at fundingportal.com. We have a international 1-800 number that you can call. It's linking through to various people's cell phones, of course, at this point. If you want to book a demo or a consult, you can go to fundingportal.com demo, and some great contacts for KPMG as well. I think when you get the slides, you can click on some of these great, easy links. Let's, Karen, open it up for questions now. I look forward to answering some myself and referring some to our partners, KPMG.
Right. Thank you, Terry, and thank you to everybody at KPMG. We've been doing such a great job of answering the questions on the online interface that there are not many questions to answer now, but I think it'd be good to ask the first question to Anouk. So I noticed a lot of people were asking specifically about the Canadian Emergency Wage Subsidy Program, CEWS, and how to calculate revenues if you're a nonprofit or a charity. So maybe you can give us a brief overview of the different things to consider there.
Actually, yes. I wish I had my written answers that I just gave still in front of me, but I'll go about this now. Basically, there's specific rules for a nonprofit, and there's an election that can be made. So for the qualifying revenues of those charities, you can take out some of the gifts that you received or the donations that you received. And basically, I would refer all of you to the Q&A from the CRA. And there's a lot of examples in there that will browse for each of you the best or the closer situation to yours, because what I notice and what we've noticed from all of the help that we've provided to various people, each question is a question of facts, and based on facts, the answer will vary and its application to it will vary. So what I would propose to you is that at the end, the link to the frequent Q&As from the CRA website be circulated. And then if you don't find your specific situation in one of these 35 Q&As, further assistance would be needed or would be helpful.
Anouk, I have a bit of color as well to add. So maybe for charities, one thing that we've seen is that keep in mind that you need to compare the revenues that you have amidst the crisis and amidst the qualifying period to the prior year, or either an average of January and February of 2020. If your revenues are typically recognized, and that would be part of your accounting policy. So if your revenue are typically recognized when you meet certain milestones, such as events, a fundraiser, a golf tournament, a charity gala, or some sort of specific deliverables, keep in mind that if, because of the COVID situation and the sanitary measures that were taken by various levels of governments, it might make it that you wouldn't be recognizing revenue based on the sheer fact that these are being postponed in future months. So speak with your accountants, speak with your the folks that are helping you in preparing your financial information, and maybe in some cases what we've seen is that charities were taking a donation that they were receiving yearly and just dividing it by 12 and recognize it on a straight line basis over the months of the year. But when in fact it should be recognized when you do when you complete the deliverables that is linked to the revenue. So and that would just be applying your accounting policy on a monthly basis, because a lot of companies are just doing it on a yearly basis typically. So speak with your accountant if that's the case, because we've seen situations where that would be helping charities in preparing their documentation for the queues.
Well, perfect. Thank you, Anouk and Jean-Philippe. That was very insightful, and I think everybody can refer back to the notes for just to check the details. So moving on to question 2, this one is going to be for you, Terry. So a lot of innovation companies have indicated that they're doing R&D and they're considering applying to IRAP, but they're also looking for other programs to support their projects. So could you walk us through the typical process that Fundingportal would undertake with a company like that to get them from I'm looking for funding to hey, my check is in the mail?
Yeah, I think that's excellent. And Karen, I'm just going to suggest, if it's not difficult for you, because it would be nice to see all of us as we're talking, but maybe just flipping back to the speaker's bio slide is great, as we hear from Jean-Philippe and Nuke and myself. So we're not all staring at those hands up in the air for the next minutes, but yeah, I'd love the opportunity. This is we've been doing this now since 2011, so 9 years, and helped really thousands of companies to do exactly what you're suggesting, of kind of getting from, gosh, I sure would like some of that money, into actually getting it. So as I mentioned, we walk through 3 steps at our find it stage, and really each of our steps we like to offer kind of 2 really different service levels. I like to call it kind of a cheap and cheerful, and then a more advanced level. And the price points, of course, vary too. At the kind of cheap and cheerful level, I've mentioned that our fund search tool exists on our website, and it's a self-help tool. It's you can just click on it yourself. You enter in some basic information, just like using an Expedia or a hotels.com or a realtor.ca or all the other search tools that we use in our life. And you're going to enter about 21 data points. It's all drop-down menus. So it only takes, I would say it takes about 3 minutes to use the search tool. We don't need to have audited financial statements. We need to know revenues as kind of an order of magnitude. Are you a pre-revenue company? Are you under $1 million? Are you 1 to 5 million? Are you 100 million plus, etc.? So point and click, and same on earnings. A bit sort of your key sector and all the information funder really needs to make a high level pre-qualification or eligibility determination. Which province are you in? Are you Quebec based? Are you clean tech? Are you advanced manufacturing? Some keywords right now, people are entering the COVID-19 as a keyword, and that allows the fund search tool to quickly identify the COVID programs that correspond to your corporate objectives and corporate metrics. And then you can use the filters at the back of the tool to dig down deeper. And, for example, because we're using AI now to power the tool, if you enter that you're a clean tech, it will also search for green tech and GHG and carbon related programs for you. You don't have to do that yourself. We cap the number of programs at 20. It's it was a good long list of programs that are out there. It's, not designed to give you, just like MLS, to give you every house in Canada. It's designed to give you a discrete list of programs that are responsive to your search criteria. I think for companies who are, wanting to move forward in a more in-depth, thorough, informed, data-driven way, then they would upgrade to what is our funding sources reports. And these are custom, and I know KPMG can help you with those as well. Really custom workups that dig down deeper. They're typically 30 or 40 or 50 pages. We may find 30 programs. We triage them. We rank the top 3. We do predictive intelligence around how much you're likely to get under a particular program. We dig down to that fine print around eligibility, not just the factors that funders put on their website, which are often very high level and really quite misleading. For example, it's not that helpful to see that, IRAP will fund up to $5 million if in fact the average award in your particular community is $50,000. It misleads. And not to be critical of IRAP, which does a great job overall and obviously is constrained by how much they can say, but in working with a expert and these kinds of reports, it will give you a really accurate sense that what you will get for your project in your community. We've talked about the application process. Unfortunately, there's really no super fast, easy, tech-driven way to do that. We think our bot does it as well as possible. We provide a guaranteed turnaround time of 15 days. This is a huge efficiency saver versus spending weeks and months that many organizations do on the application stage. And clients love our alerts. It's probably our most popular tool, where we're just tracking all the programs for you and keeping you informed and sending you an email when applicable programs come up. So that's kind of the typical way that we work with companies, and through the alerts, it's sort of a virtuous circle where we're just kind of constantly out there, and we work over many years with our clients to find them multiple programs at any time. Thank you.
Well, thank you. Yeah, thank you, Terry. That was really helpful to understand. So let's aim the next question at KPMG. A couple of people asked about the subtleties of applying to a wage subsidy if you're also getting a shred claim, and I think that's worth addressing live.
Yes, it is. Basically, the way the CEWS Act is built, any income, employee revenue that you'd base the subsidy on cannot be double dipped, so cannot be used for any other credit. So they did make an exception for shred. So you can't accumulate 2 credits on the same employee's wage. So it's you have to choose whether you claim the 75% subsidy or you leave it as shred claim.
Mm-hmm. Well, I think that's really important to highlight. And in fact, that's most likely the case on all programs, right? You can never double dip.
Except for specific exceptions. That's right. That the basic rule is that.
Yeah,
okay.
and Karen, I'm going to jump in. We lawyers, Anouk and I, go for the fine print. So I would agree with her that there are circumstances where you can double dip, or as governments like to call it, you can stack. I think the simple rule is you can't stack for the same dollar, but you can stack for complementary dollars. So to give you an example, if I'm doing a large scale R&D project and I'm going to do some hiring, and I already have attracted some wage subsidies for that particular set of hires from a federal government program, I can't also get federal dollars for those same hires, but I can get federal dollars for other aspects of the project that aren't covered by the wage subsidy, such as commercialization activities or equipment or marketing my solution, etc. Okay, so stacking is allowed and in fact encouraged. It just needs to be for complementary and not the very same dollar being subsidized twice under 2 distinct federal programs.
Right. Oh, that's a great precision. Thank you, Terry and Anouk. And I know a lot of people are going to be happy to hear that, because that can really increase their funding outcomes. I think we have time for one last question. If we didn't get to your question, don't worry. We'll be following up via email with some of you. So the final question, I'm going to address this to Terry. Some people on the line today are academic researchers at post-secondary institutions, and they're wondering what's going on with funding for research. Can we help them to find money? What do you think?
Yeah, I think that there are 2 paths into funding there. There are the agencies whose particular focus is on supporting academic research and don't fund private sector. So mostly we focus on, companies and their eligibility. So I'm really pleased this question has come up, and you'll know them. They're really what we call the tri-agencies, or the tri-council, NSERC and SSHRC and CIHR in 3 specific areas. CIHR for academic-based healthcare-related academic research, and NSERC for sciences, and SSHRC for the social sciences. So those are the 3 biggest programs. There are a number of other specific ones too, and those are all federal, so the provinces have some as well. But in addition to those 2, then there are programs that support joint applications by companies together with an academic institution, where the money flows to the academic institution for them to carry out work on behalf of a company. And examples of those are, I'm just drawing a blank, Karen, what's, 5-letter acronym. They're all 5-letter acronyms. Anyway, there's a number of programs like that you can, and sometimes companies don't really like them because the money doesn't flow to them. It flows to the university, and that's frustrating because the company has to do a lot of the work on the application, and we understand that. On the other hand, if you can get, 5,000 or 15,000 or 20,000, maybe across 2 or 3 different academics, leading academics who will work for your organization and help you solve problems, add a lot of credibility. In the company we mentioned, riskthinking.ai, it's a perfect case for collaboration with universities around drawing on AI experts and having them work to solve this risk analysis process that's so important in stopping climate change. So that's a summary of the kinds of programs that are out there for the universities.
Right. Well, thank you, Terry, and thank you, Jean-Philippe and Anouk and everybody else from the KPMG team. So that brings us to 1 o'clock. We're going to wrap up the session. Thank you for everybody for joining us.
It's been a pleasure.
Wonderful.
Thank you.